Welcome, everyone. It's the cryptolark. Super excited to have on today Carl from the moon. Carl, how's it going, man?
I'm super fine. I'm in Thailand, enjoying life, and yeah, everything is super fine. How about you, man?
Doing awesome. Before we kind of clicked record here, we were talking about Thailand, and of course, it's an amazing country for any of you who haven't visited. But Carl, what a great choice for somewhere to sit out the apocalypse.
Yeah, exactly. I mean, I'm here with like-minded people, crypto people, entrepreneurs, and yeah, it is the perfect place to be quarantined and be isolated because it's just the paradise here, and I'm super happy, and yeah, I'm happy that I got stuck here of all places in the world.
Yeah, it's a good spot for a digital nomad to wash ashore, so to speak. But we're
Yeah.
not talking about Thailand in this episode of the Crypto Lark. What we're actually be talking about, of course, is Bitcoin. We're going to be talking about the Bitcoin halving, long-term price targets, the Bitcoin death cross. Is it even relevant? The money printing that we see going on around the world, the traditional markets. Is Bitcoin a slave to the S&P 500? That and so much more. So I think let's just jump straight into this conversation. And I want to get your thoughts about Bitcoin being so linked to the S&P 500 recently.
Yeah, so this is something that I think we have seen tendencies of this even before, but nothing very obvious. We've seen Bitcoin be somehow linked to the S&P and sometimes more towards gold, but nothing really obvious, just like a little bit back and forth. However, now in the big initial shock in this crisis, we have seen clear correlation between basically everything, Bitcoin included, and I think it's not very surprising because of the fact that when you see these massive amounts of billions and even trillions of dollars just evaporating from different markets, then people are losing money. They are losing, and they have to cover these losses by selling other assets. And it's not really a choice. It's more of a they have to sell. They have to sell things that they don't even want to sell. So that's why we also saw gold get an initial shock to the downside when the Dow and the S&P started to fall. So, um, and this is something that I actually been talking about on my channel and also in different interviews. I even recorded an interview with AIBC just like I don't know 1 week before the big crash, where I talked about how I think it's possible that Bitcoin will actually sell off in the initial stages of the crisis because of this fact that people are selling everything they can to cover
Mm-hmm.
other bigger losses. So to me, it's not very surprising. It's still a little bit sad, of course. We would love to see Bitcoin act as this safe haven right now, but I think it's maybe a little bit too much to ask for to have Bitcoin as a safe haven now, because Bitcoin is still seen as a risky asset in the eyes of the big mainstream and the big institutional investors. Um, I mean, sure, it's limited in supply, it's decentralized and all of this, but it's still speculative in the eyes of the mainstream. Of course, we're extremely bullish and we're not selling, but these guys, they have to be convinced. And I think that now in the big initial stages of the crisis, I think that they're gonna sell what they don't understand, and those people that just diversified into Bitcoin,
Mm-hmm.
those people that hold maybe $10,000 worth of stocks and then $500 worth of Bitcoin, they will just liquidate Bitcoin immediately. It's just that's how it is. So these people are selling the weak hands, so to speak, and I think that it's actually a good thing for Bitcoin to shake off all of this speculation. And so actually, I think this is a good thing for the longer term. But now in the short term, of course, it's not fun to see the Bitcoin price go down. And I think most people in crypto, like everyone, did not expect this. Even the bears, even the ones that are bearish on Bitcoin, did not see this big dump
This is
coming.
true.
So
They didn't even get that bearish. Some of them, you know.
yeah. So everyone was caught by surprise here, and I guess we can call it the Black Swan event or whatever. But yeah, crazy times.
It definitely crazy times. This de-risking of portfolios, in a way, it's almost kind of a good thing because what it says is that over the last year to 2 years, Bitcoin has actually been able to capture that institutional interest that we always talk about. The Fidelity customers, they came in, right? The Wall Street guys, they came in. These guys were all buying Bitcoin, and unfortunately, the reality of when you invite those kind of investors to the party is that as soon as things start going south, they drop everything. They're not here for the mission, for the revolution, for wider financial freedom, or even seeing Bitcoin as something more than just like basically something else they can trade and make money off of.
Yeah, exactly. So I think that all of these people, they are probably gone now, because when you see something like Bitcoin, a weird little internet coin dump like 50% in just a few days, I think you're selling if you don't know what Bitcoin is. I mean, you must sell. If you don't know what it is at that point, then you're stupid if you're still holding it, right? So so I think that, but us who made the research, we who understand Bitcoin, we know that this short-term volatility is just the price changing. The fundamentals are still there. Bitcoin is still, in my opinion, the best form of money in the world, just like it was a few weeks ago, and it will continue to be so in the future. So nothing has changed, only the price changed in the short term.
Yeah, and people's perceptions of how good Bitcoin is based on the US dollar value going up and down. And you're right, the fundamentals of Bitcoin, they're the same today as they were a month ago, and those are good fundamentals. Now, speaking of things with bad fundamentals, the money printers have been going insane over the last few weeks. I mean, I started talking on my channel about the repo crisis, 6 months ago or something when it started happening. That repo crisis, of course, is still going, but we've seen just so much money be promised or printed already to be thrown into the global economy. I mean, we've got 6.2 trillion from the US, 2.2 trillion for direct stimulus, 4 trillion for liquidity for the markets. European central banks promising 750 billion. There's a new proposal by President Trump to have $2 trillion for a construction project across America, which that's all going to be new printed money. It's going to be crazy. The IMF has said that they're willing to put up 2.5 trillion to support 80 plus developing countries who are getting hit hard by this crisis. I mean, this is all funny money. This isn't coming from a savings account. This is all just, hey, let's make some more money. It's wild. How much money can they print?
Yeah, I think that what they're proving now is that the answer to that question is how much as they want. It's unlimited. It's obvious by this point that the printing presses, they will continue to print, and it's insane seeing these trillions of dollars being printed, and this is unprecedented. We have never seen this before. This is, I mean, we have seen a few countries, of course, end up in hyperinflation, but now we're seeing a global phenomenon. This is not just one country. This is, for the first part, it's the US, the dollar, which is the world reserve currency. I mean, that is insane. I mean, of course, Venezuela, Zimbabwe, we've seen this before, but now that we see the world reserve currency, the currency that is actually backing up all of the other currencies getting printed in the trillions of dollars, that is scary because, I mean, who knows what's going to happen? We haven't seen this before. I mean, it's an experiment. I mean, people call Bitcoin an experiment, but I think this is the real experiment. This is something that is completely unprecedented. And I think it's obvious also that the central bankers and the economists, they also have no idea what they're doing, because it feels like they're just printing and doing the interest rates changes just as they go. It doesn't really seem like they, I mean, the financial crisis of 2008 was, of course, spurred on and created by low interest rates and increasing debts. And the only thing they did after was actually just do the exact same mistake again, but even more. They lower interest rates down to 0%. Before 2008, it was just 1%, and just for a short period of time. But now it was 0% for a very long period of time. So we've seen record low interest rates for a record long period of time. We haven't seen that before. And so, I think that the world central banks, they have created a debt monster that simply, I can't see how you can solve it. It's not possible to solve in a undramatic way.
No.
This will be resolved in a dramatic way, and what they've been doing so far is just push this problem into the future by just increasing debt. It's just like, let's say I have a credit card bill of $10,000. Instead of, like, it won't solve the problem if I go and take another credit card, and if I pay off the first credit card with even more credit card debt. It doesn't solve the debt problem. It just pushes the debt further into the future and creates even more debt. because all debts, there is interest due to be paid on this debt. And yeah, the debt levels are insane, much worse than 2008. And that's why I've been saying on my channel for a few years now that I believe that the problem that we will be faced with now in the future soon will be much worse than 2008. And it's potentially so that it might be even worse than the Great Depression of after the stock market crash of 1929. And
I agree.
I mean,
I agree.
I mean,
It's crazy. It's when you actually see this big picture and you understand that from the central bank's perspective, everything, the only tool they have is a hammer, and everything they see is a nail, right? And that's all they can do is just print more money, print more money, print more money. And I think a lot of people in Western countries will feel very safe, like, oh, but I live, in America, so I'm the dollar's really strong, or I live in England, and the British pound's strong, or I live in Europe and the euro's going to be strong. Like, just because we haven't seen hyperinflation hit one of the world's major fiat currencies doesn't mean that we won't. Rewind Europe 50, 60 years, we saw major economies hit massive hyperinflation. I mean, I think it was in the 30s with the was the Weimar Republic, I think, that had massive hyperinflation to the point of like Venezuela. It was insane. It can happen to anyone, anywhere. The fiat system is an experiment. Modern monetary theory is insane. The banks have no idea what they're doing. These guys, they're all just looting as much as they can, giving as much as they can to the corporations. Everyone's having a great time taking all this free money, except for everyone that's not, that small elite club.
Yeah, it is completely insane what we're seeing. And I think we are witnessing history being written. And yeah, based on the fact that we have not seen this before. And just like you said, people don't expect this to happen on a big global scale. But I mean, ever since 1971, no currencies in the world are backed up by gold anymore. They are all backed up by the dollar, which in turn is backed up by nothing. So we're seeing just a big, yeah, it's insane how we got to this place. And I also know that, of course, a lot of people back in the 70s, or not a lot of people, but some people, they pointed out the problems of going on to a fiat currency standard. And interesting thing is that these people, they thought that this would collapse in the next 10 years, next 20 years, and this is just going to be completely. But yeah, I mean, these people, they have been continuously saying that this is going to collapse. And I mean, even the past 10 years, I think the thing is that it's very interesting how far they have gone, going so low in the interest rates and negative interest rates. And I guess what I'm saying is it's crazy how much they have been able to push this into the future and just kick the can down the road. This sinking ship should have been sinking a long time ago, but they just make it an even bigger problem. And the horrible part is that the more you push it into the future, the bigger the debts, the bigger the problem, and the bigger the fall. So
we're well over 250 trillion globally right now for debt, for everyone out there in the audience who may not know. I mean, the U.S. alone, they're closing in, I think, on 24 trillion here in the near future. That's just government debt. We talk about consumer debt as well. The whole picture, 250 trillion in debt globally. You cannot pay that. That would take generations to pay this debt back. And who are you paying it back to? The banks, the central banks. It's insanity.
Yeah, I think what is needed is sadly just a big reset. It's just a big default of all debt. Because to create something new, I think we have to first get rid of the bad, because I think it's impossible to save this. It has gone too far, and these debt levels, they're too high. And of course, so what you have to do is basically let all of the bad corporations default. You need to let the bankruptcies happen. Because many of these businesses should not be able to exist. They exist only because of cheap credit, low interest rates, so they can borrow currency for cheap and invest in things that should not. For example, if I invest in a tractor for my farm, and my loan cost is $100 for 1 year, then I need to make at least $150 that year to gain a profit from this loan. But if you lower interest rates, and let's say the borrowing cost is just $2 now, then I can borrow a much worse tractor that will only generate much less money. And basically, if interest rates were to come back to normal levels, then my business would not be a profitable business. So it's like a company that shouldn't really exist. So when you lower interest rates, and I mean, you're incentivizing bad business models, unprofitable business, and that's the problem now. We have a lot of businesses that simply should not exist, and not only bad businesses, also good businesses like Apple and these other very, very profitable corporations. They are also incentivized to borrow money and potentially invest in not very productive things, like buying back shares, for example. That's the
Oh, it's
perfect example.
crazy, man. Stock buybacks. It's
Yeah.
wild. And the thing with these corporations is that they know they can do it because 2008 proved beyond the shadow of a doubt that these corporations are too big to fail, and that no matter how irresponsible they are, no
Yeah.
matter how much they should fail, the government won't let them fail. They'll get a socialist bailout instead of letting capitalism just work its way. And look, this is an extraordinary situation, but I feel like this whole crisis right now is just a big scapegoat for what is really a cancerous economy and fiscally irresponsible, corrupt companies getting more free money.
Yeah, exactly. Just take Boeing for example. I might be wrong on the number, but I think they took somewhere along the lines of $10 billion. So without taking too much seriously the number, but they took a lot of money, and they bought back shares ever since 2008. Now, if they, instead of just buying back shares, saved all of this money for a rainy day, then maybe they wouldn't be in as much of a trouble today as they are. Now, they would probably still be in a huge trouble. Don't get me wrong, but this money would help them. But now they basically they don't have this money. They just bought back shares. And when you buy back shares, you're not increasing productivity at all. You're just propping up the share prices, and this irresponsible way of doing business should be punished, but it's not. It's actually further incentivized, like you
Yep.
said, by bailing them out and giving them even more free cash. And this is a big moral hazard, because now in the future, even more corporations, these too big to fail corporations, they know that they can do even more of this really irresponsible stuff. So I mean, I can't see, like it's just so insane
the
how everything is
the
going right
world's
now.
run by madmen. It's absolutely crazy. All these big successful, they're all broke. They're all broke. Everyone's in an eye-watering debt. Everyone's broke. They're like the giant corporations. They're living paycheck to paycheck, just like their employees. The only difference is they're only living paycheck to paycheck because of their insane greed of buying back stocks and all this stuff. But man, it's we could go on about this stuff for hours. But I want to move on to a
Mhm.
slightly different topic here. Should you keep your money in the bank? I think that we all saw that video from the FDIC last week where the lady's like, keep your money in the bank, it's all safe, and had this really sappy music and stuff playing. That to me says, holy cow, they're actually worried about people doing a bank run. And we've seen capital controls in countries all over the world. Just this week, we got reports out of Egypt that Egypt has implemented very strict capital controls on people, so people are only allowed to get a portion of their money out of the bank, right? Remember, when it's in the bank, it's not your money anymore, it's the bank's money. Do you think that there is a real possibility that we could see bank runs in major economies?
Yeah, for sure. I think it's eventually inevitable that people realize the fundamental flaws of the current monetary system, the fact that it's a fractional reserve system where banks, they only hold maybe 1 or 2% at most of the reserves. Everything else is just credit. It's just currency created out of thin air by the banks, the private banks. And when this is unveiled, then of course people will want to take out their money, because how this probably will start is that the banks will do these currency controls. They will say you can only withdraw $500 per month, and then it's only $100 maybe, and then it's just they will do lower and lower, and eventually you won't be able to take out money. That's when everyone will realize that the money was never there in the first place. So and that's of course a very, very dangerous thing, because that means that the whole currency system we have today would collapse, because 95% or something of all the currency that we use is the private banks' money. It's created currency. It's
Yeah.
the credit. So if all of that evaporates, then we have a massive deflation going on, where all of this, the currency supply will just shrink. So yeah, this inflation that we've seen for the past decades will just be it will be a huge deflation.
You know, I've seen a few people in my comment section saying things like, oh, I try to tell people at work about all the money printing and Bitcoin and stuff like this, and they just look at me like I'm crazy. And my response has been, these are the people who, when things go down, they're going to be the ones standing in line for 12 hours to get $50 out of the bank to buy a loaf of bread because the money will be worth so little at that point. And that might sound dramatic, but just go and ask people in Argentina, in Ukraine, in Lebanon, in Egypt, in Zimbabwe, and on and on and on and on and on. Fiat is not the safety net that we think it is. But we gotta talk about Bitcoin. We're about 20 minutes in the video now. We gotta talk about Bitcoin, Carl. We gotta do it. We gotta do it. So, the Bitcoin death cross. This has just played out on the moving averages the other day. Do you give this a lot of weight? Do you think that this is showing that we're going to really be moving into a bit of a downtrend, or do you think it's going to, death cross?
So actually, I don't really put too much significance to these death cross and golden crosses. And of course, a death cross is when the 50-day moving average moves below the 200-day moving average, and the golden cross is the exact opposite. And the traders around the world, they use this as a buy or sell signal. And actually, if you do go back in the Bitcoin history, and if you did buy and sell on the death and golden crosses, then you actually make money over time. So that should tell you that you should maybe give some credibility to these death and golden crosses. But personally, I'm not trading or investing based on the golden and death crosses. I try to look at other indicators, but I still think that we should look at it and take note of it, because if 100,000 people look at it and give it significance, then it might be a self-fulfilling prophecy.
Exactly.
So that's why I always bring it up. I always make a video about it, and I always tell people that this is the previous performance, and this does not guarantee future performance. But we can take note of it, and we can use this event in this. We can take this indicator in a basket of other indicators and try to get like a confluence of indicators. But personally, I don't really think that the death cross is going to be a big problem for Bitcoin, and I don't think that the death cross is going to bring us down to 1K or something. Just like the golden cross that happened just a couple of weeks earlier did not bring us up to any high insane prices. So yeah, I'm a little bit I don't give it too much significance. I guess that's what I'm saying.
There you go. Now, back on Black Thursday, we saw the price of Bitcoin get down to around $3,800 approximately, depending on which exchange you're looking at. Do you think that that was the bottom, or do you think that we could see lower lows coming in as the sort of crisis grinds on?
So I think that now that we're seeing this big financial crisis happening, I think that all bets are really off. I think now, just like we talked about earlier, this is unprecedented times. We have never seen this before. Bitcoin has never been around in a financial crisis. It was created during the last financial crisis and has basically just been growing in a big bull market. So I think that it's very hard to know for sure what will happen with Bitcoin, especially as we see the stock markets potentially fall even further, which I really believe we will see. I think that all this money printing and stuff will not help. But I would say that if I had to make a bet, then I would say that I think that we did bottom. I think 3.8K was probably the bottom. But I do want to make a big disclaimer and say that I actually thought that the 6.4K level was the bottom before we broke down below that. So that should tell you also, like, we are living in unprecedented times, and these volatile moves are very, very hard to predict. But we did see a huge wick down below the 200 weekly moving average, and usually when we see a massive sell-off like that with big volume, that usually marks the bottom. It also usually marks the top, just like the $20,000 top. We saw huge volume come in, and so that's a good sign that we saw a big capitulation candle So a lot of people capitulated. And just like I said earlier, I think all of the weak hands, most of them must have been shaken out now. The weak hands that are not shaken out, they probably couldn't sell for some reason. Maybe they were trapped on some island without internet, but I think they would sell if they could, because that was a really horrible drop. And yeah, like we talked earlier, if you don't understand Bitcoin, then I think you sold. So that's a good sign. This means that I think there should not be a lot of selling pressure from now on. And also the 200 weekly moving average has never been broken in Bitcoin history. And what I'm talking about now is we have never seen a weekly decisive close below. We did actually see a small weekly close now below, but we came straight back up again. And we have never seen Bitcoin basically come down, and for a longer period of time, we have never seen Bitcoin come down and trade below this 200 weekly for any longer period of time. So I think that's a good sign that we're still above this very, very key macro, structurally important trend line. So everyone who's not aware of the 200 weekly, go to TradingView, pull out the 200 weekly, and you will see, and just go back in history, you will see that it was we always got supported by it.
Yeah, I've been talking about the 200-week moving average here on the channel, so hopefully most of the people watching today will be aware of that. But yeah, it was I think a rare opportunity actually for the buyers out there. And we did see a lot of buyers come in around the $5,000 price mark, according to the data that we're now see coming off of exchanges, and to the OTC brokers and stuff that I've talked to. They've been saying that, yeah, we actually had a lot of interest when Bitcoin was around $5,000, right? People were interested in buying it around that price, which is very interesting. I think for a lot of the investors that were able to get in and get that price, that was a potential, opportunity of the year to buy Bitcoin under the 200-week moving average. I mean, that's quite significant because it is such a significant line in the sand price-wise for Bitcoin. Like you said, though, all bets are off. It could be a wild, wild year. We still have a lot of crisis to play out in front of us. Unemployment numbers could go through the roof. We could see corporations collapsing. But I think they'll print enough money to, stop all that stuff. But still, tread carefully out there, everyone.
Yeah.
Now, I want to talk a little bit about your shorter-term price predictions. So where do you see Bitcoin going, maybe before the Bitcoin halving, and potentially what do you see as the impact of the Bitcoin halving, if any, on the price action?
Yeah, I think that now with the recent things we've seen, people have almost forgotten a little bit about the Bitcoin halving. We don't really see people talk a lot about it anymore because people are very bearish. And usually when you're bullish in bearish times, then you get a lot of hate, and people are really depressed about the prices.
Yeah.
Because if they didn't lose money in the Bitcoin market, they lost money in the stock market. And if they didn't lose money there, then they lost money somewhere else. So people globally have lost a lot of money. But I think that the Bitcoin halving is a huge thing. And I really try to put a lot of emphasis on this, because this is one of the fundamentals of Bitcoin, the fact that the inflation rate will be cut in half every 4 years until the inflation rate eventually reaches 0%. And that is unique for Bitcoin. There is no other asset in the world that will eventually have a 0% inflation, meaning that there will never be anything else created beyond this limited supply of 21 million. So that is unique, and this makes Bitcoin actually the most scarce asset on the planet. Much more scarce than gold and the most scarce diamond out there. I mean, gold has an inflation rate of 1.6% per year or something like that. And even the most scarce diamond in the world, you can always find more of them. And if the diamond goes up in value 10x, then people will be incentivized to find more of these diamonds, so the inflation rate will go up even higher. But this cannot happen with Bitcoin, because even if Bitcoin goes up to 20,000 tomorrow, there's something called this difficulty adjustment, and most of these people watching probably know about it. But the difficulty to mine Bitcoin will it will be adjusted automatically. And this is something that can only happen, of course, in a digital world, because if gold becomes more expensive tomorrow, then there's nothing stopping people from going out and mining more gold. There's no difficulty adjustment. It's more profitable to mine gold, so they will. So that's a cool part about Bitcoin. And now the halving is coming up, and now we're seeing this big inflation rate getting cut in half. And now I think the next what is it? The next inflation rate will be like 1.8%, I think. Now it's like
Yeah.
3.6%
Yeah, it'll be
approximately.
around 1.8.
Yeah, around roughly. And I mean, that puts the Bitcoin inflation below the official target of central banks of approximately 2%. So now, in that case, Bitcoin is already officially a better store of value, technically and fundamentally, than or theoretically, than fiat. And we know, of course, that the inflation rate of fiat is much, much higher than 2%. It's probably 5, 6, 7.
Mm-hmm.
It's much higher. But I think it's very interesting. And also, this puts the inflation rate of Bitcoin very close to the inflation rate of gold. And of course, the gold market cap is, what is it, like 100 times higher than Bitcoin, something like that.
Something like that. Yeah, it's
So
around 8 trillion probably currently with the price increases we've seen recently, 8.5 trillion even. Gold's been on a bit of a
yeah,
run recently, so that gives you a bit of
so
perspective, everyone.
yeah, so only based on the scarcity. Only based on the scarcity, Bitcoin is extremely undervalued when you compare to other scarce assets like gold. But of course, scarcity isn't everything. Um, Demand is. Demand is the
Mm-hmm.
important thing for money. And what I think is that all of the key properties of Bitcoin that makes it a very good form of money will drive demand. So it's not only the most scarce asset in the world, but it's also decentralized, just like gold. But unlike gold, it's also digital. So you can send it digitally to anyone in the world at any point in time, no bank days and all of it. So all of this will create demand, and that is the most important thing for money. And I mean, I can talk about this for hours, but I really believe that Bitcoin is the best form of money in the world, and it is better than gold. And I mean, gold has been the best form of money for thousands of years, but now that we live in a digital world with digital payments and a digital economy, we simply need a digital money. That is just how it is. And gold has been perfect for thousands of years, but now we need something else. But I still think that gold and Bitcoin will complement each other. So I still think that gold is still the safest way to hide your wealth, but Bitcoin is this wild card now that can really get this leveraged effect, and especially if we see a big currency crisis, which I am expecting in the following years.
And one of the exciting things about Bitcoin is that gold is, relatively a very established, well, not relatively, it's a very, very established asset, right? We've had millennia for price discovery. And of course, we've had 50 years of price discovery with gold in a fiat, unbacked paper money world. Whereas Bitcoin's only, just a little over a decade old. We're still in the early price discovery stages of a totally unique asset in terms of what it is, right? So in 10 years' time, this is what I think a lot of Bitcoin investors are missing. They're looking, oh, I'm not going to make money on tomorrow. Oh, I lost 5%. It's time to sell. Like, look farther down the road. Where's Bitcoin going to be in 5 years or 10 years? I mean, 20, 30 for Bitcoin. Imagine that. I think a lot of Bitcoin holders can't even imagine actually still owning Bitcoin at that point. But by that point, by I think 2032, the Bitcoin block reward goes under 1 Bitcoin per block. I mean, that is a goal right there. Hold your Bitcoin at least until 2030, potentially way beyond that, because we are in early price discovery stages. What are multiple Bitcoin halvings actually going to do when we compound this effect over years, not days or weeks or months?
Yeah, exactly. And not only that, I think that the value in Bitcoin doesn't really actually come from Bitcoin itself. I think the value of Bitcoin comes from the flaws of the current monetary system. Because if this monetary system was perfect, then there would be no need for gold. If we could trust banks and if they always did the responsible thing, then we wouldn't need Bitcoin. We wouldn't even need gold. We could just use this paper money, and we could use that. And if they guarantee that they will never print more and they will never manipulate interest rates, then it would be fine. But as we've seen time and time again, whenever we give over the power to governments and banks to control the currency supply and interest rates, then it always ends in disaster. And we're seeing it unfolding now once again. And therein lies the value of Bitcoin. It's a way to cut away all of this third party and all of this central banking, because it's fundamentally dangerous to leave this power to a third party. So Bitcoin has no third party risk, no default risk, meaning that you're not dependent on someone else's balance sheet. If I buy a stock, then, well, if they go bankrupt, then my stock is not worth anything anymore. So there's a default risk, and even currencies have a default risk, because I mean, the country can default, and the currency could be worthless if they continue to print. So
This has happened.
yeah. So Bitcoin is unique in that sense, because it's like gold, but it's digital. So I'm extremely bullish for Bitcoin long term, because we are seeing the monetary system very much going towards its end. It's quite obvious by now, seeing these trillions of dollars being printed, because it's not only dollars, it's also euros and all of these other currencies. And there's no way to reverse this. I mean, they said back in 2008 that all of this was just temporary, right? But there was just nothing temporary about it at all. They
Never believe the bankers. They lie. It's what they do.
Yeah. And this time, I don't even think that they will bother trying to convince us that this is temporary, because they know that we are not going to believe it this time. So they will just print and hope for the best. And they will, of course, blame the virus, the corona outbreak, and say that this is the reason for the printing. Yeah, so they can do everything under the radar. It seems like no one is realms, I mean, of course, in the crypto space and in these realms, we know what's happening, but in the wider mainstream, no one seems to be paying attention to the trillions of dollars and the extraordinary default risks we're seeing right now.
I think it's not that they're not paying attention; it's that they're paid not to pay attention. We see the commingling of financial interests all across these different organizations, and it's shocking. You know, if you watch the there's an old saying, I think it was, if you read the newspaper, you're misinformed, or something like that. That's a paraphrase. There's a better quote out there, but it's a great quote, and it really just, if you're the only place you get the news from is, you know, CNN or the New York Times, you're probably having a tough time interpreting reality because of that. Now, one final question for you for today, and then we're going to wrap it up here. What is your long-term, I guess we're not talking 2030 right here, but like top of the next cycle, right? Where do you think Bitcoin's going to end up? How long is it going to take before we see a new cycle peak? And where do you think Bitcoin could be by the top of that cycle peak?
So I think that it's very, very possible that Bitcoin will do exactly what it's been doing like 4 or 5 times already, get these big hype cycles where more and more people jump in because of the fundamentals of Bitcoin. They research Bitcoin. They realize that it is the best form of money in the world. So they buy Bitcoin. This creates more demand because the price is going up. And then eventually we see the mainstream jump in. And that's when we see this big bubble, when even the neighbors of people start buying Bitcoin just because it's this new cool thing. And these are the weak hands jumping in. And they are the people that will push the price up extraordinarily high, just like when Bitcoin went to 20,000, and just like when Bitcoin went to $1,000 back in 2013-14, this has happened like 4 or 5 times before, and I think it's exactly this will happen again. And this next bubble top, I think, I mean, if you look at it technically, and if you look at the chart, and if you calculate the fact that we see these diminishing returns over time, it seems like somewhere between $100,000 and $300,000. That seems to be a range where I think that we will see the big next bubble pop, and then I will expect another big correction of somewhere between 70 to 90% again, just like we've seen all of the other previous hype cycle pops, because all of these weak hands, they basically get punished by the big correction. There needs to be a bear market after such a big hype cycle. But yeah, $100,000 to $300,000, but that's only for the next hype cycle top. I think that we will see more of these hype cycles.
Oh yeah,
they will not go on forever, but I think that especially if we see people lose confidence in the dollar and in the fiat currency system as a whole, then people will be looking for alternatives. And if they're looking for the best alternative out there, then they will find Bitcoin eventually. And Bitcoin, in my opinion, is the best alternative based on all of the things I said earlier in the video. And actually, if we take a look at the value of all fiat in the world, then we're looking at a pool of money worth approximately $90 to $100 trillion. And let's just play with the idea that Bitcoin, which in my opinion is the best form of money in the world, takes over the value of all the other bad money in the world. Then Bitcoin could be worth as much as $5 million in the future. calculated in today's money. So
Yeah.
of course, with inflation, it could be $1 quadrillion per Bitcoin, but it
We
probably
don't want to
will.
see. We don't really want to see that though, because that means that there's an incredible economic pain, and that we've got
Yeah,
Zimbabwe world at that point.
yeah. It is. Yeah,
Good to be
exactly.
a
But
Bitcoin holder in that situation, though.
in that situation, yes, gold and Bitcoin.
That's it, the $100,000 Bitcoin. And actually, it really lines up well with obviously the stock to flow model, the logarithmic growth curve of Bitcoin. I mean, these are showing that we are going to hit that $100,000 mark at the next cycle peak. And if we look back on the stock to flow for the previous cycle peak, we got to think about 3 times over approximately the cycle peak. So the cycle peak got up to about $20,000 at a time on the stock to flow model. It was around $6,000, I think. So that was around 3 times more. So seeing a $300,000 Bitcoin, that would actually, again, have a good historical narrative to back it up.
Yeah, for sure. It's basically just the trend. And in trading and in investing, maybe the first rule you learn about is that the trend is your friend. And Bitcoin has basically been doing nothing but go up in value for the past 11 years. So far so good. I mean, it's a good store of value if you calculate from the beginning. And obviously, if you go in the shorter time frame, then on a weekly basis, then Bitcoin is not necessarily a good store of value. Actually, when you think about it, the dollar is a better store of value right now on a weekly basis and on a daily basis. But let's see what happens on a 1 year basis, 5 year basis, 20 years basis, when we see more trillions get printed and Bitcoin remains the exact same, the fundamentals stay the same. At that point, I think that Bitcoin could easily prove itself as a good store of value, maybe even the best store of value in the world.
There you go. The best store of value in the world. Long-term game, guys. Long-term game. Carl, thank you so much for coming on and having a chat, taking a little bit of time out of your time there in Thailand. Go have a swim, man, and enjoy the nice weather and all that cool stuff. Thank you so much for coming on the channel and sharing your insights with the community. Really, really appreciate it.
Thank you very much for having me. Great conversation. This was